Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. I deliver it every day.
Reports
on Ron Siegel Radio or anytime you know the actions. 306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, I plan to save you money. I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. I got ahead of myself yesterday. I got so excited when I was looking at the future. I was looking at what the celebrations were going to be, that I looked at today's celebrations instead of yesterday's celebrations because, you know, when I saw it was National Martini Day, I just couldn't help it. I just had to start celebrating early. So yesterday was not National Martini Day. It was actually National Fishing Day. But today is National Martini Day, so, you know, what the heck, well, I guess we'll celebrate twice. Who wants to celebrate National Martini Day today? A little Kettle One Martini, 3 blue cheese olives, please, and that is where we'll head with that one. Checking the markets for you. It is an ugly day in the stock market right now. We'll tell you why. We'll tell you all about it. We're down 299 points, almost 300 points. We were worse a little earlier in the day, in the session, right after the opening of the market. We were down at about 24,573. So we were down about 300 points earlier. What is the issue? Well, the market is thinking there's going to be a trade war.
I got a bad feeling about this.
Yeah, well, do you really think there's going to be a trade war? And I understand the issues of what's going on in the marketplace. I understand where the president is coming from when we're looking at adding more tariffs to China. But China is talking, you know, we've got this huge deficit. Now, when you have a huge trade deficit with China, and you are your economy, the U.S. economy, accounts for 25% of the world economy. Now, we've got 340 million people out of about 7 million people on the planet. And we're 25% of the world's economy. Do you think China wants to lose that? Now, what's going to end up happening, I'll tell you right now, if you really want to understand this.
I want the truth! You can't handle the truth!
What's going to end up happening is President Trump is going to have to come up with some method for China to simply save face. That's all it's going to be. We're going to go through this whole process. If you are a stock market investor, if you have a 401k, hopefully you follow the way of the world. The way the world works, the way the markets work, is to try and keep some of what we call your powder dry. Keep your powder dry. What does that mean? You have to have some cash. You got to have some cash in the market. You have to have some cash available. When you've got that cash available, then you're able to move forward. And when you have a day like this where the market is down significantly, down 291 points, it was down yesterday as well, what you want to be doing at that time is you really want to be able to go in and buy. Right? So many people look at the markets and they say, oh, no, we're not going to buy one. You know, we're going to get scared in times like this. Now, there is a floor on the market, 24,361. That's about where the market may go down to before it bounces back. That's the low for the month. It's probably also going to be about the low for the last few months. 23,533. You know, we're not seeing where the markets are going to go down too much further than where we're at right now. Now, when we do and start looking at those numbers, 23,533, it's about 1,300 points below where we are right now. Is it painful? Absolutely. But the idea here is, when do you make money? When everybody else is worried, when everybody else is scared, that's when the money is to be made. Now, I'm not a financial advisor. I don't give financial advice. I'm just telling you what I'm doing. I'm telling you what my opinion is. Out there buying, I was looking at the markets this morning very early and saying, what is on the horizon that I can actually buy right here, right now? Why do I want to be buying? Well, the market's down low. If it goes down further, now I'm not going to deploy everything. I'm not going to deploy everything in the market right here, because what if it goes a little bit lower? My whole focus is to consistently have some powder. That's the word I was looking for. Some powder in the barrel so that I can continue to buy as the market goes down. What are you buying? Well, you got to watch the fundamentals of stocks. Here's one. I'm gonna have to get a shout out to my friend Bob Watson, because 4 years ago, he was saying that Facebook is going to implode. Well, now we're starting to see that there's a lot of problems at Facebook.
Surprise, surprise, surprise.
Now, what are the problems? What's happening? Well, there's so much misinformation there. There's going to be an opening for something new to take Facebook's place. What will that be? I can't tell you. I don't know. Again, I'm not a stock market predictor. I just know that something is going to take over for Facebook, because it's already starting to lose its zeal. People are not excited about it anymore. Why? Because you see, they're trying to control everything, and Americans do not want to be controlled. They want to make sure that you only get to see the news they want you to see. We don't like that. They're going to want to make sure that we only hear the opinions from people that they want us to hear. Well, we don't like that. We're already seeing that the young people are saying, you know something, I'm tired of all the marketing, all the advertising on there. So who is the Facebook audience? The Facebook audience is getting older and older. Is that bad? No. I'm not saying it's bad at all that the audience is getting older. What I am saying is, if you're looking to reach the millennials, that's not going to be possible any longer. Most of them have already left. They've gone to Instagram. And why did Grandma and Grandpa get on Facebook in the first place? Well, they didn't like Facebook. They didn't want to have something like this. The reason Grandma and Grandpa got onto Facebook, or Mom and Dad got onto Facebook, is because they wanted to see what their kids were up to. Now, if they're not going to see what their kids are up to, are they going to stay on Facebook? No, they're going to go to something new. What are they going to go to? Well, they're already moving over to Instagram. The young people are moving to Instagram. Instagram, I know, is part of the Facebook family, but it's not as commercial yet. Until Facebook figures out how to make it more commercial, it may be a challenge for them to make more and more money, because that's why they give it to you free. You know, you listen to some of the lunatics in Congress, and I don't care which side of the aisle you're on, but you listen to some of the loons in Congress, and they say, well, you're collecting people's information. Yes, of course they're collecting people's information. How do you think they're generating the dollars to pay for the service? Now, anybody that doesn't realize that that's how they pay for the service, well, I'm sorry. But that is the fact of the matter. That's how the service continues to grow. Do you think there's a free lunch? Well, I'm going to say to you, no, there is no free lunch. You have to pay for it. Somebody's got to pay for that service. Somebody's got to pay for Mr. Zuckerberg to fly around the country in his private planes. How does that happen? Advertising. Where do we advertise? Facebook. What do you advertise? Who do you advertise to? The exact demographic you want to talk to. We promote our programs. Do you think I'm promoting the programs to a 10-year-old or 12-year-old or 14-year-old? No. Why? Because they're not the ones that have any interest in how to save their credit score. They don't have any desire to try and buy a house. That's not the market they're in. They're not worried about should they sell their house on their own or should they hire a great professional. No, they don't care about that. So we want to talk to the people who have an interest. I always love the idea of these different organizations where you talk about people getting spammed. Well, do you really want to spam somebody? I look at it, we send out tens of thousands of emails every week to the listeners of our program. I don't have an interest in sending an email out to anybody that doesn't want to get the information from us. I relish the idea of people opting out of our list. Why? Because I want to only send information out to the people that want to receive it. Same idea with that Facebook message. When we boost or we advertise the program and our sponsors on Facebook, we show them, hey, don't advertise to the demographic that... If you're a real estate professional, do you really want to be advertising or promoting your service to somebody who bought a house 2 months ago? No, that's going to be the home improvement company. They're going to be the ones that are going to advertise to that person. The furniture companies, maybe a painter, maybe a window covering company, maybe an appliance company. That's who wants to advertise to the person that bought a house 2 months ago. A real estate professional, maybe a year after they've bought a house, maybe 2 years. But hey, Facebook understands that. They know and they're watching what we're liking, what we're doing. They're trying to deliver a tremendous experience to the user. That tremendous experience would end up being not, the idea there again is not for you to get the ads that you don't want to see. Why do you think they've got, it used to be that they would call it a cookie on your computer system. Well, they still use cookies, but really the more common item that they're using is actually something called a pixel. When you go shopping on Amazon, I was just looking at Amazon, I forgot what it was I was looking for, but all of a sudden the ads I start seeing on Facebook are exactly what I was looking up on Amazon. Well, they put a pixel on my computer and they're letting me know that, hey, XYZ company has the same product. Well, does that enhance my experience? Just a thought there for you. You are listening to Ron Siegel Radio. And we've got a great program lined up for you today, of course. Then again, being that I work with our development team every morning, our production staff every morning, you better hope that I think it's a great program. But we've got some comments and some topics that are very, very lively. I chat with this about all the time. One of the topics that I talk about, and I'm kind of going off script here, so my production team is probably going to really be disappointed with me. But it's real estate, and it's the idea of getting a new home loan. And I shared this with somebody yesterday. It was a fascinating conversation. That when you really think about it, unless somebody's really out to stiff you, interest rates are kind of like stamps. Right? You know exactly what they are. You can go online and find out. Wells Fargo, Bank of America, Chase, they all have their rates all posted. Everybody kind of follows the same thing. Interest rates are all going to be generally within about 1/8 of a point. What differentiates a great mortgage banker from just going online and getting the rates? Well, it's understanding how to position the borrower, the borrowing family, to get the best rates possible because of the loan level price adjustments. And one of those, obviously, is the credit score. So today we're going to chat about how you can increase your credit score by 100 points in 30 days. What happens to credit card debt when you die? 5 reasons that you should not try and sell your home on your own. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037 and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I understand. That's my message. I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by our friends over at Gold Star Mortgage. When you are ready for that next mortgage, Gold Star has the programs and the products that are beneficial to you. Just give me a call at 800-306-1990. I'll put you in touch with our friends at Gold Star. How do you save money by selecting the right mortgage banker? Well, it has to do with at Gold Star, the Fast Pass loan approval. Would your real estate professional find it beneficial for you to be totally underwritten, totally loan approved before you go out shopping for a house or before they make that purchase offer? Think about that concept. If they're able to do that, then you can save, and we've seen this potentially, I've seen as much as $10,000 to $50,000 saved on the purchase price of a new home, just because the real estate professional is then able to make a same as cash offer, no loan contingency. When they've got no loan contingency, they're competing with the investors out there when there's a lot of people buying or trying to get the same property or competing for the same property. Makes a big, big issue. What is happening in the market right now? Again, I was sharing this during the last segment, where the market is, where the market's going. Market down, the Dow as represented by the Dow Jones Industrial Average, down 303 points. What does that mean for you? Well, the 10-year Treasury is at 2.88. It was up over 3 just recently. When the 10-year Treasury is going down, and I believe this is just a short-term blip. It's not going to be a long-term issue, but the 10-year Treasury, 2.88, down 4 basis points. It was 2.92, down 2.88. That's the interest rate that someone gets on a 30-year loan. Well, there's a lot of people that don't understand the stock market, that don't understand the Dow, and they see a day like today and yesterday where the markets have been very volatile, very worried about what's going on, what will come to pass. When we look at this trade war, or the supposed trade scuff that we're in with China. Well, the uneducated individuals, and I don't say ignorant, or they're just uneducated. They're out there saying, well, I'm going to sell and I want to put my money into something safe and secure. What is the safest investment that we have in the U.S.? It's the only thing that financial professionals, loan professionals, or financial planners can say is guaranteed, and that would be the U.S. Treasury bonds. Well, the 10-year Treasury, 2.88, you sell your money out of the stock market, you put it into something safe and secure. That would be the bond. Well, the bond also is one of the leading indicators of what's going to happen on the mortgage market. Well, the 30-year Fannie Mae mortgage bond right now is up 13 basis points. When that goes up, by definition, the interest rate that you have to pay to get a home loan goes down. So if you've got the ability of locking in an interest rate, if you've already got your property selected, is now the right time to lock in that rate? Well, it could be. And why do I say it could be instead of it giving you a definite answer? Well, the answer becomes, I believe that whenever you get into the loan, whenever you get into a home purchase contract, lock in immediately. That's my idea. Lock in immediately. Now, unless there's something that's odd that's happened, then you don't do it. But you want to lock in immediately, and you want to lock in with a mortgage banker that will protect you in case interest rates go down. What does that mean? Well, if they go down significantly, what a mortgage banker can do is renegotiate the rate with the investor that they may be working with on that particular program. When they renegotiate the rate for you, you save a percentage of that renegotiation number because there's a cost to it. A rate lock is nothing more than a reservation of money. A reservation of money. You can change the program, but it's going to basically be setting you in to the exact same date as when you reserved those funds. Why do you want to be reserving the funds? Well, it becomes very simple. You want to put no surprises. When you're buying a house, you're looking at closing, you don't want to have a surprise come up at the 11th hour. Nobody, surprises are great. Birthdays, anniversaries, holidays, that's when you want surprises. When you're dealing with something as big as your home, and you're dealing with something that's going to affect you, I'm going to say for the next 10 years, even though you're probably going to take out a 30-year loan, it's the loan I recommend for people. We only keep our houses 10 years. We keep our loans 5.2 years in this country. So that's what we really focus on, is those numbers right there. So when we start thinking about the area of locking in, I want to get you locked in right away. I want you to take the best possible rate that you can at the time of contract. Then worry about what happens over the course of the escrow period while it's happening. So the reasoning, again, stocks down sharply. The trade war saga with China continues in response to China's proposed tariffs, which is in response to our initial $50 billion of planned tariffs on imported Chinese goods. President Trump announced another round of tariffs on $200 billion worth of Chinese goods. See how that works? We said 50 billion. China says, well, we're going to retaliate. So we say, okay, you want to retaliate? We're going to go with 200. China will probably come back with something, and then we'll come back again. And before we get to the end, being that we buy so much more from China than they buy from us, Well, they're going to end up losing. That's why President Trump said right along that winning a trade war with somebody that you've got a massive deficit with is easy. They're going to run out of things to tariff, and their economy is already slowing down. Ours is heating up. Well, what's going to happen right there? The mortgage bonds are benefiting and moving higher, albeit not as much as you'd expect with stocks down so significantly. The National Association of Home Builders, their housing market index, real-time read on builder confidence dropped 2 points from 70 to 68. Weaker than the big jump to 78 expected. Current sales were at 75, future sales at 76, buyer traffic at 50. Any reading over 50 signals expansion. But this was a miss, mostly due to rising lumber costs, partially due to tariffs on lumber. There are estimates that the higher lumber costs have added roughly $9,000 to the cost of a single-family home since January 2017. Now, remember when we talk about $9,000 being added, it sounds like it's an insignificant number to us in Southern California. But if you're in the vast majority of the country where you're looking at a $230,000 median home price, you start adding $9,000, that's a 5% increase. That is significant. NAHB reported that builders are optimistic about housing market conditions as consumer demand continues to grow. When putting things in perspective, we're still at a very strong level and near all-time highs, and I put a chart out so you have that information as well. More news on new construction market. Housing starts in May rose 5% at a 1.35 million unit annualized pace, more than double the 2% gain expected. Pace is the highest in 11 years. So the builders are saying that there is a big demand also. Remember, when demand exceeds supply, prices continue to go up. Housing permits, a good forward-looking indicator of future starts, fell by 4.6% at a 1.30 unit annualized pace, which was worse than expected. Again, okay, so if they're not going to, if the future is less building, yet we continue to show a lot of demand, prices are going to continue to go up. Today's move higher, mortgage bonds have broken above the 50-day moving average. I'm not going to get into all that real technical stuff. Just you need to know that I am watching that for you, and I will keep you posted if there is something that you need to know about. That's the Mortgage Minute, brought to you by our friends at Gold Star Mortgage. When you're ready for that next home loan, give me a call at 800-306-1990. I'll put you in touch with our friends over at Gold Star. And you are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what happens to credit card debt when you die? How to improve your credit score by 100 points in 30 days, and reasons you should not try to sell a home on your own. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter at Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions. You just need to make the phone call to our friends over at Credit Sanitizer. Get on their mailing list. They'll send you some updates and opportunities periodically, so you have the options of getting information. I guess that's the best word. Getting information educated to build that credit report. So what happens to credit card debt when you die? Actually, I guess I should do the Your Credit Matters segment first, right? So here's the issue. How to improve your score by 100 points in 30 days. Now, I use Credit Karma. I use a few different sources. I frequently check in to see how my credit's doing, make sure there's nothing suspicious going on. I get several updates on my credit scores all the time. Again, Credit Karma, it's free, provides detailed information about changes to your credit score. You can link all your accounts to monitor your debt to savings ratio, and they even provide suggestions for financial products to apply for and why. Remember, they're giving you a credit score, not a FICO score at Credit Karma. It's not the same. Another great feature I like to play around with is my spending. When I connect my bank account, I can categorize each transaction, see where all my money's going, which gives me a clear view of my spending habits. So I look in there all the time and like to see what my credit score is doing. I've had it go up as much as 91 points in a day. I've seen it go down as much as 93 in a day. And I look at it and say, why is it that some of these things different happen? What happened in the last week that would have affected the score so drastically? Well, big items that are there is credit utilization ratio. Now, interesting enough, I just got a new credit card. It was as a $2,500 limit, I believe, on it, something like that. And my score went down. I looked and said, why would my score go down? When I got the card, they approved it. Well, what ended up happening is the algorithms looked and said, well, is there an issue with why did he apply for more credit? Not that I need any more credit, because I've told you how I handle paying my credit card bills, and I'll tell you again in just a minute. But the issue here was my available credit went up, but they looked at it short term and said, why did he apply for the credit? Is he going to use it all right away? And that's where the issue comes up. So paying more than the minimum amount due on the credit cards, that's a big issue. At least $25 more than the minimum required. I watch my credit cards, and I'm kind of a nerd about this. I go online and look, and I just found out that because I watched some of them for other people, my son was hacked the other day, and he doesn't drive, yet he had 4 charges from a gasoline station. Well, obviously we knew that they were fraudulent, brought it to the bank's attention right away, got that taken care of for him. But what I do is very simple. Every Wednesday morning, I've already done it today, is I go in and I look at all of my credit card balances. And I see what the balances are, and I round down. I don't round off, I round down. So if I have a $310 balance on a card, I send them $300. If I have a $380 balance, I send them $300. I leave the under 100 amount as an open balance on the card. That way there's always a balance due when the payment due date comes. But every Wednesday I pay off the cards all the way down to that number. So my utilization is always very, very low. And I'm making 4 payments every single month on every credit card, maybe sometimes 5 payments if it's one of those months where there's extra in there. But here's the issue: is I'm consistently paying the cards down, so my utilization is high. The higher the utilization percentage is very low. I've got a lot of utilization cap available. The brakes on your credit scores at 10%. 30%, 50%, 70%, 100%. That's what we're playing with in this arena. So one of the areas, the only 2 ways you can increase your credit utilization or your credit availability is to either pay down your card or increase the limit. So unless there's a fee to it, every 6 to 12 months, increase or ask for a credit line increase every 6 to 12 months. Why? Well, it helps with your credit utilization ratio, which helps your credit score. Credit utilization ratio is the amount of debt you have divided by the total amount of credit you have been extended. So again, you sign into the credit card account online, see if the credit limit request is waiting for you, or call the number on the back of your card to learn more about your options. The suggested utilization ratio, you want to stay under 30 or under 10, whichever you can do financially, to maximize your credit score. Another major contributing factor is a perfect track record of on-time payments. Now, if you're making a payment every week, what are the options, the opportunities of having a late payment? Well, they're not there. But again, I've shared this with you before. Set up a $25 or $50 or $100 payment for the day before, so it gets to your credit card company the day before your payment due date every month. So if your payment due date is always on the 18th of the month, make sure on the 16th or 17th you've got a payment that hits there. That way, if you're out of town, you forget for 4 weeks in a row to take care of this, or whatever happens, you've got a payment going in, so you've got a perfect track record of on-time payments. Credit Karma will tell you about your record of consistent and on-time payments. By never missing a payment, you don't have to worry about it. You might even put on your calendar the payment due date, the statement closing date. Those are the 2 most important dates for your credit card, is those 2 dates, the statement closing date, payment due date. You want to get as much paid as possible before the statement closing date and never be late on the payment due date, so you don't have to worry about it. Again, auto schedule payments at the beginning of the month or have them recurring makes it nice and simple for you to go ahead. What is considered a good or great credit score? According to Fair Isaac and Company, the creator of that 3-digit score, used to rate your borrowing risk. The higher the number, the better. The FICO score ranges for mortgages 300 to 850. Credit cards, I think, will go up to 900. A good credit score is typically in the range of 720 to 740. 740s or 760 and above, those are great scores. Your credit score is made up of 5 different factors that all impact your score in a different way. So 35% is your payment history. This is a record of your payments on all accounts for the length of the account history. Again, that's like your report card. Now, the older the card, the better. The older the history, the longer the history, the better. So though, if possible, never ever cancel out an old credit card that has a high credit limit, low balance, and a history of on-time payments. Don't close those. Your credit score could drop if you do that. 30% of the total available credit. This is what makes up your credit utilization ratio. Determine your utilization ratio. Take the amount of outstanding balances on each account and divide it by your total credit limit. So a credit card with a $5,000 credit line that has $3,000 in used credit would be a 60% credit utilization ratio. Not good. You want to get it below 30 or 10. 15% is the age of credit history. This considers the number of years you've been borrowing. The longer your credit history of positive payments and responsible account management, the better. 10% type of credit. This includes all types of credit, such as installment loans, revolving accounts, student loans, mortgages, etc. 10% goes to credit inquiries. Every time you apply for a new credit card or loan product, a hard inquiry is reported on your credit report. Remember, this is 10%. You want to focus on the 30s, not the 10s. A lot of people call me and say, well, I don't want to have my credit run. Well, if I can help you with the 30% portion, because I'm using a credit inquiry, a 10% item, aren't you better off? I believe my credit score significantly increased because credit utilization has a really high impact on the overall score. Also, the perfect payment history. Credit score considerations. Credit Karma uses TransUnion for their credit scores. Since all scoring models are not the same, my score may have changed in different ways with the other 2 major credit bureaus, Equifax and Experian. I think it's also important to stress that you can do exactly as I did to a T, but your score may not change in the exact same manner. Everyone's score is affected in different ways, even though you may be taking the exact same actions. So don't worry. Here are some examples on how this can happen. If Mrs. Borrower, Jane we'll call her, has a history of perfect payments but forgot to pay her bill 1 month, her score won't be affected in nearly the same manner as person B, Megan, who has a long string of late payments on her report. In fact, due to Jane's great payment record, she may even be able to call up her credit card issuer and explain what happened and see if they'll consider reporting a late payment to the credit bureaus or not reporting that payment to the bureaus. Megan, on the other hand, won't likely be able to get that removed no matter how hard she tries, given her historical patterns. Hard inquiries can affect your score anywhere from about 4 to 10 points each. If John fills out an application, but it's his 3rd application in 30 days, it's more likely that his score will drop more than Jeff, who filled out only 1 application in a 30-day period, assuming they're in different areas. So if there are 3 applications all in the mortgage world, they buffer those and call them one and the same. So don't worry about that. Let's say Jason and Betsy both increased their credit line by $500. Jason's balance was at 0. So he now has $1,000 in open credit that's not being used. Betsy's line was maxed out at $500, so the new credit line increase only gives her $500 in available credit. They both perform the same action, will both have different impacts. So just a little bit of information, some history there. Credit is a big issue if you're looking to get a new loan, car loan, home loan, furniture loan, any of those. Your credit score is going to mean more than a lot of other areas, yet I have people ask me, well, what's the interest rate? Well, work on your credit score, and then the interest rate is going to be significantly better. That's Your Credit Matters segment. Again, brought to you by CreditSanitizer.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what happens to credit card debt when you die, and 5 reasons you should not try to sell by owner. All that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com. Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today. Being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Top 5 reasons you should not try to sell your house on your own. In today's market, with home prices rising and a lack of inventory, some homeowners may consider trying to sell their home on their own, known in the industry as a for sale by owner, FSBO. Several reasons why this might not be a good idea for the vast majority of sellers. So let's look at the top 5 reasons. Number 1, exposure to prospective buyers. According to the 2017 profile of home buyers and sellers from the National Association of Realtors, last year 95% of buyers search online for a home. That is in comparison to only 15% looking at print newspaper ads. Most real estate agents have an internet strategy to promote the sale of your home. Do you? Number 2, results come from the internet. Where did buyers find the home they actually purchased? 49% on the internet. 31% from a real estate agent, 7% from a yard sign, 1% from newspapers. The days of selling your house by just putting up a sign and putting it in the paper, long gone. Having a strong internet strategy is crucial. Think about that. 1% from the newspaper, 7% from the yard sign. And what are the most important things people look at on a regular basis? They're looking at the yard sign and where are you advertising my property. So that accounts for 8% of the purchases, the yard sign and the newspaper. Number 3, there are too many people to negotiate with. Here's a list of some of the people with whom you must be prepared to negotiate if you're going to try and sell by owner. The buyer wants the best deal possible. The buyer's agent, who solely represents the best interest of the buyer. Buyer's attorney in some parts of the country. Home inspection companies which work for the buyer and will almost always find some problems with the house. The appraiser, if there's a question of value. Number 4. For sale, FSBOing has become more and more difficult. The paperwork involved in selling and buying a home has increased dramatically as industry disclosures and regulations have become mandatory. This is one of the reasons that the percentage of people FSBOing has dropped from 19% to 8% over the last 20 years. Number 5, you get more money when using an agent. Many homeowners believe they'll save the real estate commission by selling on their own. Realize that the main reason buyers look at FSBOs is because they also believe they can save the real estate agent's commission. Seller and buyer can't both save the same commission. A study by Collateral Analytics revealed that FSBOs don't actually save anything, and in some cases may be costing themselves more by not listing with an agent. One of the main reasons for the price difference at the time of sale is properties listed with a broker that is a member of a local MLS will be listed online with all other participating broker websites marketing the home to a much larger buyer population, and those MLS properties generally offer compensation to agents who represent buyers, incentivizing them to show and sell the property, and again potentially enlarging the buyer pool. If more buyers see a home, the greater the chances are that there could be a bidding war for the property. The study showed that the difference in price between comparable homes of size and location is currently at an average of 6% this year. Why would you choose to list on your own and manage the entire transaction when you can hire an agent and not have to pay for anything? Bottom line, before you decide to take on the challenges of selling your house on your own, let's chat about it. I don't sell real estate, but I'm more than happy to give you the information I know, I understand, and I believe when it comes to selling your home. That is the Real-Time Real Estate segment. Again, brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. What happens to credit card debt when you die was a question posed. Well, the answer might surprise you. Credit card debt does not instantly vanish upon the death. The credit issuers don't just walk away. They go after the funds through the estate of the deceased or any joint card holders. So let's take a look at how this process works and what the family can expect after losing a loved one with credit card debt. Joint card holders are stuck with the bill. If you open a credit card account with a joint card holder, perhaps a spouse or business partner, the liability for all debt on that card rests on both card holders. That is true even if the joint card holder never used the account. If you have a joint account with your spouse and pass away, your spouse is stuck with the debt. While this seems far from ideal to the family, that is exactly what you signed up for when opening the account. In some cases, even authorized users can be on the hook for the debt from a credit card. If you're an authorized user of a card from a parent or anyone else in poor health, it may be best to get yourself removed from the account just to be on the safe side. You don't want a credit card company to come after you for debts you did not incur yourself. Divorce does not mean you're off the hook. Most divorce settlements focus on important topics like child custody and dividing assets, but credit card debt is an important part of any divorce as well. Splitting up the liabilities ensures a fair, clear, and agreed upon result that is in the best interest of both parties. But if two people shared a joint credit card and the account was not updated after the divorce, it could still list an ex-spouse on the account. It may also include children, new partners, and other authorized users. This makes the post-mortem credit card experience a nightmare for some families. After divorce, the best option is to completely close any joint accounts and remove your ex as an authorized user. Also, make sure you're removed from any accounts that your ex-spouse used as a primary cardholder. This helps to ensure you don't get stuck paying bills for your ex if he or she passes away after divorce. The estate pays debts before benefits. When someone passes away, all of their assets generally become a part of an estate. Even if the estate promises to pay each family member $100,000 in a last will and testament, that $100,000 payout doesn't happen until after all debts and liabilities are paid by the estate. If an estate leaves 4 beneficiaries $100,000 each, for example, but the person died with $100,000 of credit card debt, the credit card debt gets paid before the beneficiaries. That means the beneficiaries may only get $75,000 each, as the $100,000 credit card bill is paid first. Sometimes this requires selling real estate, losing a vehicle through seizure, or other unpleasantness. In some cases, credit card companies may even try to go after adult children or other relatives to recoup their losses. If you have any doubt about this process, your best option is to work with a qualified estate attorney who can guide you and other beneficiaries through the process. Staying debt-free makes it easier for everyone. Death is an unfortunate reality that we all have to deal with from time to time, but the process of managing an estate and other financial aspects after losing a loved one does not have to be miserable or difficult. With the right planning, managing an estate can be a fairly simple process, but is even easier if the deceased did not leave any outstanding debt for their beneficiaries to deal with. So what happens to credit card debt when you die? If there is any way to collect, credit card companies will chase the opportunity, but if you can pay off those debts before saying goodbye, things will be much easier on those you leave behind. And as always, we ask you, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We will talk to you next time on Ron Siegel Radio.